Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday the 30th of January 2021. We're publishing our weekly gold and silver update for the week ending the 29th of January. We also briefly look at political events and economic reports which could shape what happens to the US dollar and therefore precious metal prices. And we also take a quick dip into what's been happening with this new app that everyone seems to be talking about, or rather, this new manipulation of an app. So let's take a look. Now, firstly, a quick shout out to two of our latest videos, which relate to the FOMC announcement on Wednesday and also the rather surprising GDP figures. And we've placed links to both of these below. Okay, gold fell $8 last week from $1,856 to $1,847, having hit a high of $1,877 and a low of $1,832, a fall of 0.5% for the week. In sterling terms, gold finished at £1,349, that's down £7, and in euros it closed at €1,522, that's down just €2. Silver rose again this week, up $1.53, rising from $25.52 to $27.05, having hit a high of $27.66 and a low of $24.76, a rise on the week of 6%. Stark contrast to gold. In sterling terms, silver closed at £19.75, that's up £1.09 an ounce. And in euros it closed at €22.29, that's up €1.33 an ounce. The gold to silver ratio fell from 72.7 to 1 to 68.3 to 1, breaking that all-important 70 to 1 level. Bitcoin was up. It rose just over $1,000, about $1,025, and its price currently stands at $33,975. The Dow Jones closed on Friday at 29,982, down 620 points on the day and down 1,014 points on the week. The S&P 500 closed at 3,714, down 73 points on the day and down 127 points on the week. And the Nasdaq Composite closed at 13,070, down 266 points on the day and down 473 points on the week. So equity markets all down. Brent crude closed at $55.04, down 37 cents. And WTI crude closed at $52.20, down just 7 cents on the week. You'll see that oil prices currently seem to be hovering close to this 50 to 55 level, with some producers wanting it to rise up to that $60 level, and they may be successful, though we have said for a long time that the 50 to 55 level tends to be the sweet spot. The dollar index stands at 90.58. That's up, actually, 0.35 on the week. Now, our conclusion for the trading range last week was, quote, "So where does this leave us for gold and silver prices next week?" Well, in our view, little changed with the same level of highs and lows we predicted last week, with perhaps the trading figures being a little higher as far as silver is concerned. So we see gold trading between 1750 and 1900, with 1700 and 1950 being outliers, and silver trading between 24 and 2650, with 23 and 2750 being outliers. Well, we saw gold trade within a very tight band of between 1832 and 1877, just $45. And silver traded within a wider band, as low as $24.76 and as high as $27.66, so almost $3, with silver only breaking that $27 level on Friday and closing marginally above it. So let's address gold first. Well, it really failed to gain any real traction during the course of the week. Broadly, the trend was down with one or two quite sharp movements, positive movements, on Thursday and Friday, but again, overall, within a relatively narrow band. In our view, there was some confusion. Mostly the dollar edged back towards the end of the week, but then US yields rose, and so from a technical point of view, gold almost ended up forming what analysts call a weekly doji. Now, a perfect doji is where the opening price and closing price are exactly the same, and a weekly doji obviously is the start of the week and the end of the week prices are the same. They weren't quite the same. There was a few dollars out, but it was broadly a doji. Resistance is, as we've previously quoted, at $1,850. Purists will say 1,849, which is where the 10-day moving average lies. We're not going to argue over a cent. Support lies just above 1,800, which represents January's lows. The MACD is printing red with a flat trajectory, which points generally to consolidation. Now, what helped gold somewhat on Friday, particularly, was the decline in the equity markets. Vaccine issues and doubts surrounding both supply and efficacy, particularly with the new strains, took their toll, and gold volumes were relatively light to slim, with the dollar broadly holding firmer than many thought, maintaining to some degree a little control over any attempted rally. Now, by way of technical guidance, any breach above $1,870 and then a rise and hold above 1911 will be positive and suggest a trend change. But any breach below 1846 and then 1821 underneath will be negative. Silver proved the star of last week, rising 6%, with most of the action occurring Thursday and Friday, with, frankly, prices relatively subdued and in marginal decline before then. What Friday did show us, though, is that $28 is strong resistance. But should this level be breached, then we could see silver having a relatively easy glide to $30, but perhaps in time, save of what we're going to mention in a minute or two. There is some, though, weak support at $26 on the downside, and even the 50-day EMA of 25.43 can be broken, though most analysts agree that the 200-day EMA, which stands at 23.10, is probably as low as silver is likely to go, with 24 above it, though, offering serious support in advance. So even the most pessimistic of analysts are really saying 23.10 is probably now the absolute floor. So, at current prices, whilst the view is stronger prices over the short to medium term, we're probably witnessing silver in the mid-range of where it can fall and or rise to, i.e. within $3 to $4 in either direction. But, having said that, we issue some caution. There's been news that the Reddit group is targeting silver as one of the most heavily shorted markets on the planet, which suggests we may see a very explosive move higher in the near future, if enough pressure is put on the shorts to present a real short squeeze. Now, whether this is achieved is another matter, but we cannot rule and should not rule this out, and more commentators will be remarking on this over the next few days. Now, if it does achieve this, there is the dilemma that some may view it as a market manipulation, which will be reversed at a given point. In other words, what goes up must come down and could do so equally fast, while others see it as perhaps the start of the final leg in the silver bull market that many have predicted for many years. So, should this rise occur, just make sure that you've done whatever personal analysis you can and decide, perhaps to some degree in advance, which strategy you intend to adopt, either to exit your silver holdings or to continue and hold. Some analysts are predicting a price breakout to anywhere between $39 and $45 and some even higher if this takes place. Now, we ourselves are long-term holders of silver, so unless silver frankly breaks well above $50, we doubt that we personally will be selling. But until the event occurs, it's very difficult to know. Economic data published last week showed a slightly improving initial jobless claims report, falling from 914,000 to 847,000, and the continuing jobless claims falling from 4.97 million to 4.77 million. Personal income for December rose from minus 1.3% to plus 0.6%, and core inflation rose from 0 in November to plus 0.3% in December. The Consumer Sentiment Index fell slightly from 79.2 in December to 79 in January. But the two most influential, perhaps, data points affecting prices was Friday's pending home sales index for December, coming in at minus 0.3 against expectations of a negative 0.2, But without doubt, the GDP figures had the greatest effect, which is why we produced a video on the subject, where we saw GDP for quarter 4 come in at 4% compared with expectations of 4.3% and 33.4% seen the previous quarter, thereby dragging the overall GDP rate for 2020 to a decline or negative 2.3% compared with a positive or increase 4% in 2019. We also this past week had the FOMC announcement where it left rates unchanged, where it left the Fed funds rate standing at 0% to 0.25%, and its current level of bond purchases, or QE, were also unchanged. However, the tones were rather dovish, with a virtual guarantee that the Fed will not act precipitately in reversing course, as it has done in the past, and will ensure the data confirms any move it will make before making that move. That was hidden in some of the detail. Now, looking ahead to this coming week's economic data, which could have an impact on both the dollar and precious metal prices, Monday, and there's a lot of data, so bear with us. Monday, we have the market manufacturing PMI, the ISM manufacturing index, and motor vehicle sales all for January. Tuesday, housing vacancies for quarter 4. Wednesday, ADP employment report, market services PMI, and ISM services index for January. Thursday, weekly jobless claims, productivity quarter 4, unit labour costs quarter 4, and factory orders for December. And on Friday, the non-farm payrolls, unemployment rate, average hourly earnings all for January, and the trade deficit and consumer credit figures for December. So something for everyone each day, with a focus, of course, on the 3 jobs reports, which are the ADP, the jobless claims, and the non-farm payrolls. Now, on the political front, President Biden has issued numerous executive orders overturning a number issued by his predecessor, and we're still waiting to see whether his proposed $1.9 trillion stimulus package will be adopted in full or watered down. If in full, again, this could have a negative impact on the dollar. So, where does all this leave us for gold and silver prices this coming week? Well, it's going to be perhaps the most interesting week for the year, or of the year, and especially for silver. If it has entered this retail investor space, as Reddit suggests, then frankly, silver prices could go anywhere, from mid-20s to mid-40s or even mid-50s. If there's no further intervention and it doesn't take hold, then we still expect silver to trade positively within the upper $20 region, if only because of the amount of economic data being published and a continuance of further stimulus. Now, gold we see really consolidating and therefore forecast a regular price range, unexciting, of between 1800 and 1900, with 1700 and 2000 being absolute outliers. But silver may prove more difficult to forecast. We've been pretty accurate these past few months, but frankly next week is a conundrum because of this, what we call app intervention. Under normal circumstances, we would expect silver, though, to trade a little higher than last week, with $25.50 at the low end and $28.50 at the higher end, with $24 and $30 being outliers, so we've increased the outliers. However, if there is continuance of what we saw on Friday, and Reddit is right, then $30 could easily be breached. Now, tomorrow we shall be publishing episode 9 of Bitcoin versus Gold and Silver, so if you follow Bitcoin, don't miss it, as its price now seems to be settling around this level, and some will argue potentially in preparation of a major move upwards. So what do you think is going to happen? Is silver going to fly off the charts, or is it going to consolidate around current prices? And what about gold? Can it remain lower? Can we see a gold to silver ratio fall to as low as 60 perhaps? Do share your thoughts. Meanwhile, thank you so much for listening. If you haven't already done so, please subscribe to our channel, not forgetting to press the bell sign so you're notified of our videos as and when they're published. And as always, we wish you a safe, enjoyable weekend, and of course, a prosperous week ahead. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.